Welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me live in Markets is JJ Kinahan. He's the Chief Market Strategist over at TD Ameritrade. Thank you very much for joining me. As always, first Monday of the month, something I always look forward to. But let's take a look at the IMX this month. The Investor Movement Index down 23% from January, which lends to the activity that we saw in February.
Yeah, some real movement in the movement indexes, and it's the biggest down move we've ever seen. And I think it reverberates the theme we saw in January. In January, we saw our clients cut back some of their exposure to the market. In February, it continued. And if I had to summarize what February really was, it was primarily cutting back exposure, except for a couple of days around that big down move. People came in and bought some stocks that they thought maybe had gotten beaten up a little bit too much. And, you know, the first one that pops to mind is Alibaba, down over 20% from their highs. People come in to buy a stock like that. When it happens, they continue with stocks like Amazon, and Amazon being part of consumer discretionary. That was actually the biggest area where we saw people buying last month. And then, you know, Apple, as you would expect, and even GE and Ford, some old school. And people may ask, well, why GE? You know, Ford's got some issues. But GE, to me, is an interesting one because if you're an investor, you try and buy stocks that are getting beaten up. And when they're beaten up, if you're a longer-term believer in it, and I still think many people believe that this CEO has come in, he stated their problems, and can get them on the right track.
Even on the sell side as well, it seemed as if it was relatively organized, and people use this opportunity to get in where they were looking for bargains.
They were, and what you see is them selling some of the higher beta stocks to buy some of the lower beta stocks. I think maybe the one surprise to me on the sell side was Facebook, which has now become a core holding for many people. So I think one of the things that we saw in that pattern was, again, people buying around the sell-off around February 9th, selling some of their holdings, and then selling even more. So I think there is the fear that we've seen since February 9th in the market has definitely registered with our clients. They played for the pop. Once they saw the pop, They started to sell some things.
Well, let's talk about your outlook in general, though, because it seems as if the market is super sensitive to headlines more than we saw in 2017. And a lot of what we saw in February was predicated on the short vol trade and interest rate concerns. Then we saw the sell-off at the end of last week because of uncertainty around tariff policy. Seems as if the underlying fundamentals are strong within the U.S. equity markets, but they are super sensitive to headlines and this uncertainty with policy.
You're right. And actually, Jill, I'd make the argument that we've returned to a more normalized market. You look at the VIX, you know, it's trading close to 20. We're seeing back and forth action. It's just we went so long where if you bought the dip with a blindfold, things worked out for you. That's not the case anymore. The markets are going to move back and forth in a more normal way. Now, perhaps we're getting some overblown headlines, so to speak, because, you know, sometimes the headline sells. You have to look inside the story a little bit to get what it really is. I think what actually has gotten lost is that this was a tremendous earnings season. And, you know, that isn't registering right now maybe with some people, but over time we know that earnings always drive equities, so that will come to roost. And let's not forget we had an incredible run in 2017, and that doesn't go on forever. So I think we're going to see this continued pattern, particularly for the next couple of months and through the next quarter, of people reorganizing their portfolios, trying to figure out who the winners are. You know, you have a stock listed here at Nasdaq and Netflix. And so I think one of the big news items of last week that people may not realize is its market cap is now greater than GE's. And so when you see something like that, you're like, this really is a change in economy, and people trying to figure out how they can change their portfolios to match what's going on in the economy.
All right. Well, thank you very much for joining us. As always, traders,
a pleasure,
thank
Jill.
you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.